Okay, welcome everyone. Stock market technical analysis. We're going to use the charts to be our guide. Let's find some trade ideas for this week. So I'm going to get right into it. Leave me a thumbs up. And if you guys, as I'm going along, if you're interested in learning how to use technical analysis to your advantage in trading the markets, take my course, link in the description below. All right, we're going to start out with the triple Qs, but in general, I look at the heat map, the S&P 500 heat map right here, and you can see just pretty much a broad-based rally across the board. Just everything's going up. No real reason why, but I think there was just some selling into the last week, and you've got the market moving the other way a little bit this morning. So we're watching for how does the market behave throughout the day. Are we going to rally in the morning and then sell off into the close? I mean, that's all stuff we need to take notice of. We're going to start out with the triple Qs. Again, I pointed out last week how the tech sector, there's been some rotation from the financials and the industrials have been the two strong sectors really this entire year as this inflation trade has been, just raging. And there's, when the Fed came out, they tried to throw a little bit of cold water on that inflation trade. There's really been no change in monetary policy or posture, basically. But all they've been doing is trying to talk down the inflation trade without actually taking any action. So what we're seeing is rotation where the financials and the industrials are selling off. And I talked about that in the last few weeks, talked about how those look like the best opportunities for a short trade. And so far, those have all worked out really well, and I think they're going to continue to work, to be honest. But we've seen this rotation back into growth or back into tech stocks. So they're coming out of the financials and the value stocks and going into tech. At least that's what they started to do at the end of last week. So what I'm looking for, though, because we have a breakdown and sell signals in the financials and the industrials, if we get that breakdown or sell signal in the tech sector, such as triple Qs, I think we're going to have a pretty sizable broad-based market sell-off where pretty much in that situation all shorts work and volatility will spike. Now we don't see it yet, so what I'm looking for on the hourly chart, again, take notice though before I get into the hourly on the daily chart, tech here, this is your March 2020 lows and this is your uptrend line, or at least the one that I find to be valid. And you can see support, and back here on May 10th, we broke support. So this was your sell signal, a clear, decisive break, and we've just been back testing. So understand that tech actually has broken that more major uptrend line that it started back in the March 2020 lows. This is the more major uptrend line pattern, and we've actually broken that. Now, it might not seem like it because we are back testing and continuing to make slightly new all-time highs, but that's as far as I see it. So I think we're likely going to sell off and get rejected, but we need to see a break of this shorter term timeline, trend line right here, and it's more clear on the hourly chart. So we've created this secondary trend line support right here on the hourly chart, and we're just continuing to kind of grind along that. You can see this morning they gapped, it was down below, but they snapped it right back up and recovered it. So no breakdown, no sell signal. Tech does not have a reason to short yet, but if we see that break on this hourly chart, a nice hourly close below, you really need to wait for that hourly candle to close because there's a lot of opportunity for kind of whipsaw signals. You can see here they whip it, they intra-hour break it down and then recover it, break it down, then recover it, break it down, then recover it. So you need to wait for that nice solid hourly close, and that would be your sell signal. If we get that, and we don't see a rotation back into the financials and back into the industrials, because that's what's going on right now. Money's kind of just jumping. It's going from sector to sector, trying to find opportunity. And if we don't see that rotation back into those sectors, then we should see that broad-based sell-off. So I'm just waiting for that breakdown. And, if or when it comes, which I think it will, then we'll start to look for, where that might go. But one of the reasons why I think we're going to get it is the big negative divergence on the RSI and the PPO. So you can see here how the momentum has been just trending down. Each new high in price that we've been making in the triple Qs has been on less and less momentum, including the most recent high. So here's the high right up in here, and you can see the momentum, I have it circled already, is lower than the former high in momentum. You can see here's your former high in momentum. Here's the lower high in momentum. across both indicators, and yet making a new higher price. So that's negative divergence. That tells me that we're likely going to get a breakdown and continue, move lower basically. Momentum often is a leading indicator of price. Doesn't always have to be, and it's not a reason to just short something or bail on a trade, but oftentimes it's a leading indicator telling you be on the lookout for a move in the direction of the momentum, which on this chart is down. So let's flip over to the SPY. SPY looks to me on the hourly chart like we're going to back test. So here's the SPY. This is interesting, actually. I drew a new trend line. So I saw some other YouTubers had this trend line, and I didn't quite have this one, but I kind of like it. This is really coming off of the March 2020 lows. It's not the exact low, but it's kind of in that area. Sometimes you can get an overshoot when momentum's really strong, but once we kind of gathered our senses back here, we started to trend. We held support right here, and then coming in, we basically started to create this trend line. We held support here, and then recently held support all through here. Several reactions. And then on Friday, you can see we basically gapped down and broke that trend. All right, so we gapped down today. They're rallying it back up for a back test. So, I think this is broken. I think the uptrend is broken on this. I think we're likely going lower. Also, the bigger picture on this one on the weekly chart, for me, it's a heavier weighting on this weekly chart for a larger trend. So to understand what the weekly is doing gives you an idea of where is the river flowing essentially. And going all the way back to 2009, which is your last bear market, the COVID drop wasn't really a bear market. It was so fast, they recovered it. Bear markets are usually sustained for some while. There's pain, there's pain in the market. It clears out all the excesses. But that wasn't really allowed to happen for the most part with this COVID drop. None of the excesses, excesses were really just papered over. So you think about the airlines that were, kind of being foolish with their money, and everything just got papered over. So not a real bear market. But here it is, 2009 on this weekly chart, and you can see here, as we started to work our way up in time, here's 2016, we held support there, held support all through here in 2018, multi-year validation of this trend line. Then we broke in 2018, and then this is when the Fed was hiking rates, so they basically broke the bullish trend, and they've been pumping stimulus ever since. This Fed has been doing everything they can to keep this market from going into a bear market, even though the trend has been broken. And you can see here, so they pumped it in 2019. This is where they're cutting rates, ran right up to resistance, and then all of a sudden COVID mattered, right? So it's not so much that COVID just popped out of nowhere. It's that, yes, COVID was already a problem throughout the world in many places. The market didn't care until it was getting rejected at technical resistance. Boom, rejected. And then recently, as I zoom in, they've recently recovered the trend line. And you can see, look at this. They ran down, held it as support. Ran down, held it as support. So this has been recovered momentarily, at least, right, in this area. And what I'm looking for, doesn't mean we're going to get it, but if we get a break back below, some sort of impulsive breakdown on the weekly chart, that to me tells me that this was a false breakout or a bull trap, and that was likely going to be the high of the market. Now again, it's really hard to call the top, but again, I'm putting out a YouTube channel talking about technical analysis. I got to try to make calls when I see them. So, whether they're right or wrong, we got to manage the risk. That's all I'd have to say is manage your risk appropriately, and you don't have to make every call right if you manage risk appropriately. All right, moving on. Okay, I'm going to move over to gold real quick. I think some of the better opportunity for the long side of trades would be gold and gold miners. They got smoked last week after the Fed came out. Gold dropped, basically from the high to the low, gold's dropped, and this is gold bullion, but about $154. So that's a pretty sizable drop pretty quickly. Down in this area, though, I believe is the buy zone. It's really down in here. This is kind of the buy zone for longer term traders especially. And what I see here as I roll out is you can see, let me just get rid of some of these squiggly lines I've been marking up. But this is the bull market, in gold. It really started in 2015, but we established a pretty clean trend back here in 2018. You can see we held support right there. There's your COVID drop, held support. And as I zoom in, held support again, held support again. That's 4 reactions. That's a valid trend line. And zooming in, we're coming right into that zone. Maybe they're stepping in a little early, which I would expect because it's an obvious trend line. I started buying gold miners last week. And then if I look at the hourly, just to give you guys kind of a micro analysis of what's going on the hourly chart, the most important thing to notice is recently, let me get rid of this one. Recently, you can see we've just making this series of lower lows and lower highs. But in this area right here, we got bullish divergence on the hourly. See right there on the RSI how we made higher momentum right there, and the PPO higher momentum right there. That's higher momentum on lower price. Let me grab the right tool. Lower price right here, and higher momentum indicators than the previous low. So bullish divergence. All right, I teach these concepts in my course. The course isn't free. It's $99, but again, it's I think it's well worth the price. The value's there to give you guys a skill set that you're going to be able to use to find profitable trades. I know I have been able to myself. The thing is bullish momentum on the hourly chart. So I think we're going to rally. Doesn't mean that it's going to be we could rally a little bit, then come in, tag this trend line. That's completely possible, but I still see the area in this area as the buy zone. All right, if this area goes, we break, then, no bueno. That's we'll have to look at, ways to exit the trade. But this is the low risk area to go long, so I like it. And I was buying things like Agnico Eagle last week. One thing I want to point out on this one, downtrend line on this daily chart. So this was your correction, I believe, in the bull market. Gold miners and gold have been in a bull market. Here's 2015. You're making higher lows and higher highs. It's an uptrend. It's a bigger picture uptrend. And we recently really ran away. I mean, it hit the low right here back in COVID, the 2020 drop, and just rallied straight up, pretty massive rally. I mean, from the low all the way to the high, 182%. And then it had a nice prolonged, correction, basically. And I think that wiped out a lot of the weak hands. Again, down here, we put in bullish divergence on the daily, and that was the area to buy. And we created this downtrend line back in that correction, and we broke out. All right, so here's your breakout of that downtrend line. What's this recent move in the last week? Well, to me, it looks like a back test of that trend line support. So you break out, you come in, you test it, you hold it, and off to the races you go. So as far as I can tell, this is the buy area, on this one. It's, right in there. Beautiful buy area from my perspective. So I've been buying it, and I'll probably continue to add. Now, there's not quite bullish divergence. So we might get a little more downside, a little more dips as we create that bullish divergence on this hourly chart. But again, I'm going to continue to build positions as we work our way in this area. All right, so that's some of the gold. That's a gold miner, but a lot of these gold miners are, they look like the selling is just about finished. Might be one more move to the downside, but I think it's going to be relatively mild at this point. Okay, I want to flip over to Nvidia, possible trade idea here. No trigger yet, so no reason to take action quite yet, but I want to point out what I'm seeing. So on Friday, we had a reversal candlestick, a doji candle right there at the top. And basically what happened is in the morning, they bid up Nvidia. If I flip over to the 1 minute chart, I'll show you guys in the morning there on Friday, they basically, see if we can find the right day. Here it is. So this is your Friday's price action. You can see in the morning they bid it up, and then throughout the day they pretty much sold it down all the way. This is a 1 minute, and there's where it closed. It actually closed below where it opened at. So bid up and then sold off. That's a reversal, and it's more obvious on the daily as it shows up in the form of a doji right there. There's your reversal doji. So a reversal candlestick is not necessarily it's not confirmation. You don't know that the reversal is going to take place. But usually what you want to look for is another confirming candle to the downside. And so far today, we have that. Nvidia down another 2.83% with that breakdown or confirming candle of sell-off. So we'll see how we close. One thing I'm looking for, if you go to the hourly, it shows up. You've got this small trend line that we're starting to create right here. You can see they're kind of trying to hold it and get a reaction there. So I'd like to see a break of that, you know, an hourly close, a nice solid hourly close, breaking down below that trend line. And in that fashion, if we get that, we're going to have that reversal candle, we're going to have confirmation, and we're going to have break of trend line support. The one thing that we will not have, if you look on the bigger picture, let's just make sure. Yeah, we will not have negative divergence. There is no, I don't see a negative divergence on the PPO or the RSI in Nvidia. So that gives me a little bit of a pause, but I just want to point it out. There is the potential for Nvidia to break down and sell off. And the industrial stocks are rallying a little bit today, but again, technically nothing's changed. The trend has been broken, the uptrend in many of these. So here's Emerson Electric, EMR, clear uptrend right there, negative divergence being put in, and a sell signal or a break of trend. So what do you do after you get the sell? Well, sometimes you back test, you run up and hit the trend line and then reject. But in general, this is the uptrend. This uptrend was broken, and I think we've started a new downtrend. So by the time the stock, if it sells off and we're all the way down here, it'll be obvious and everyone's going to want to short way down here. But the reality is that that's not the time to short. You usually want to short when you're up here, up against the trend line, back testing, or getting that initial breakdown sell signal. All right, so that one looks good. Here's Illinois Tool Works, clear uptrend line, and it's a clear breakdown right there. You can see we're holding trend all through here. We finally broke down, and the selling is pretty impulsive. I mean, you can see two big red candles, pretty impulsive selling. So a little bit of a bounce rally today, but nothing's technically changed. I think we're likely heading lower. Illinois, this one looks like it's heading all the way down here to about 191.30, we'll call it 192, right in there. And I'm going to wrap up with these two stocks. I really like these ones, JCI and LPX. These are short trades for me personally, in my opinion at least. Here's JCI, clear uptrend line right there. We put in a bearish rising wedge. We also have negative divergence, and we have a sell signal. We broke trend just the other day, and a little kickback rally today. Just keeps the hope alive, keeps bulls in there, thinking that the trend is not over. But as far as I can tell, that uptrend has been broken, and we're likely heading lower. I think we're likely going to head down, probably 52.77 and down to 47.89. I think would probably be my final target on this. But from where we're at, if we drop that far, that's a 27% drop. It's pretty good. So I like that one. Going back, potential to add to it especially if we can go up any higher and really get a good back test of the trend line. That's the potential to add to the short trade. LPX, same deal. Uptrend line coming off your April 20 lows, clear uptrend line, head and shoulders top, negative divergence on the RSI and the PPO up here. So we've got higher prices with momentum just dropping off a cliff. And then we broke trend line support. There's your breakdown. Not super impulsive yet. I haven't seen that big red breakdown candle, but still consecutive selling days last week. Even though this candle here looks green, that's because it opened lower and closed higher, still closed lower than the previous day. So it's still moving lower in price. A little bit of a bounce today, up 3%. But again, if it runs up and does a back test, that's an objective area to, add to a short or establish a short. And I see this one likely coming down. Probably final target would be about 34.13 on this, but I could see us getting all the way down there, and that would be a drop from where it's at right now, about 40%. All right, so those two I really like to the downside, and that's all I see so far this morning, guys. So leave me a thumbs up on your way out, and I'll catch you guys on the next video.